Thank you very much for giving an opportunity of introducing CRD system. I hope my presentation will be useful for all participants. First of all, I would like to very briefly touch on the outline of CRD system and CRD association. The CRD system is the combination of the database and scoring system. The database composed of a large number of anonymous detailed financial statement data linked to the default rate data and the statistical scoring system. More than 3 million SMEs, 28 million financial statement data have been accumulated into the CRD database. And based on this large database, CRD Association has established stable and reliable scoring systems and provides services to member financial institutions. CRD Association is a private entity, but SME Agency and Bank of Japan supported the CRD Association for the establishment in 2001. The primary objective of CRD Association is soundly facilitating fund provision to SMEs and improving the quality of risk management in finance. They are in accordance with policy objectives of SME Agency and Bank of Japan. A CRD system is different from large-scale financial institutions' internal system in terms of third-party independent shared system. And also different from credit bureau and credit registries in terms of the data content and provided services. CRD system is very unique to Japan, but I believe this system is very useful and applicable to other countries. Actually, we are now starting to construct this system in Philippines. I will touch on later. Today's my presentation composed of 3 parts. From number 1 to number 4, I will touch on the very basic structure of CRD system and the outline of CRD association. And in number 5, I will briefly introduce the result of the preliminary data examination we conducted in Philippines. And number 6 is the introduction of the examples of practical usage of CRD services. They are useful for having concrete image of CRD services. As I mentioned first, a CRD system is the combination of the shared database composed of detailed anonymous financial statement data linked to the default rate data and the statistical scoring system. The scoring is a mapping of PD, probability of default, in a way of regular distribution. PD is the likelihood of default over a particular time horizon, usually 1 year. And lower PD is converted to higher score. So the score means an objective numerical evaluation of an obligated creditworthiness. Unlike credit bureau or credit registries, CRD system does not provide individual credit information, but calculate comparative position of obligators' creditworthiness. The information asymmetry is one of the major factors that makes financial institutions reluctant to provide funds to SMEs. The very limited information about their business situation and the cost of the investigation is relatively high compared to the small scale of each finance. But if financial institution can employ low-cost credit risk evaluation, they can find more SMEs eligible for finance, and that means improving the SMEs' access to finance. The upper side figure shows the average default rate of profitable SMEs and non-profitable SMEs. P1 is a group of profitable SMEs in 2017 in Japan, while P2 is that of non-profitable SMEs. It is relatively easy for financial institutions to differentiate profitable SMEs from non-profitable SMEs, so having a large effect on financial institution decision makings. And the matter of course, the average default rate of P2 is far higher than that of P1. And SMEs belonging to P2 seem to be less creditworthy compared to those in P1. But The more detailed examination on obligated credit worthiness could make more chance of finance for both SMEs and financial institutions. The below side figure shows the average default rate of SMEs with less than 1% of PD probability of default, and that with more than 1% PD. I divide P1 and P2 into two segments, respectively, based on CRD scoring. P1A and P2A is a segment of SMEs with less than 1% PD, while P1B and P2B is that with more than 1% PD. So the result indicates the average default rate of P2A is less than that of P1 as a whole. And considering the P2A covers around 20% of all of SMEs, while P1B covers 8.5%, the financial institutions can find more SMEs for eligible for finance by conducting more detailed examination on obligated credit worthiness. The detailed examination of obligated credit worthiness decreases information asymmetry and improving the SME's access to finance and enlarging the business chances for financial institutions. But traditional way of detailed examination is too laborious and costly for small-scale finance and transaction-based finance. CRD system is one of the promising way for addressing to this problem that enable to calculate obligated PD based on their financial statement data. The figure shows the average default. Figure shows the actual average default rate and average PD calculated by CRD system, and you can find a very high level of coincidence between them. The accuracy of scoring model is theoretically measured by rank correlation, not the coincidence between actual default rate and average PD. But from the practical viewpoint, their coincidence is very important and largely related with rank correlation. So the introduction of the appropriate scoring system in SME finance could contribute to decrease information asymmetry without laborious and costly work. The figure shows the outline of CRD system. CRD association get anonymous detailed financial statement data with default-related data from member financial institution and store them into the CRD database after cleansing and consolidation. And based on the database, CRD build up scoring models and provide services to like a scoring service and sample data provision to member financial institutions. And CRD association conduct validation works annually for the quality maintenance of scoring model. CRD association adopt membership system. CGC, Credit Guarantee Corporation, commercial banks, and rating agencies are the member of CRD association. The present number of members is 171, except the governmental institution. The number of corporations and sole proprietor whose data have been accumulated into the CRD database is more than 3 million. And the number of accumulated financial statement data is around 28 million. It's massively large, largest in the world. The figure shows the image of data content submitted from member to CRD. Members submit data composed of 59 items of balance sheet, 26 items of profit and statement, and 6 items of supplementary description, like a number of employees. In addition, CRD association requests default-related data and some non-financial data. The number of data items submitted from member to CRD is around 100. It's very many. So CRD association can construct the database being rich in contents in addition to being large scale. The very basic idea of traditional business loan scoring model is evaluating obligators' creditworthiness by analyzing their ongoing business performance based on their financial statement data. CRD scoring model employs multiple logistic regression models with an expanded variable of default rate data and around 30 financial indexes as explanatory variables. Explanatory variables reflect profitability, efficiency, stability, and growth potential in balanced way. You can see the example of the explanatory variable in the table in slide. In this way, explanatory variables represent factors defining obligators' business performance. So we can conduct factor analysis based on CRD scoring model. CRD Association disclose detailed structure of scoring model and provide factor analysis tool to member financial institutions. We do not adopt black box policy. These models are differentiated from consumer loan type scoring model. Consumer loan type scoring model employs smaller number of explanatory variables, mainly reflecting obligators' past loan performance, like the record of delinquency. Therefore, consumer loan type scoring models are based on the analysis of obligators' past pattern of behavior, but do not sufficiently reflect their ongoing business performance. This is the introduction of AI-supported scoring model based on obligators' account transaction data employing machine learning algorithm. CRD Association recently developed this type of scoring model and started to provide services. The methodology of AI-supported scoring model is totally different from that of traditional business loan scoring model based on the analysis of obligators' ongoing business performance. The approach of AI-supported scoring model is a detection of the dataset pattern based on iterative learning, employing a random forest approach in our case. Therefore, based on this type of model, factor analysis is not available. But the AI-supported scoring model marks very high accuracy ratio in short-term prediction of default. So financial institutions utilize this type of scoring model for interim monitoring obligators while they employ traditional scoring model for initial loan decision making. But it is also possible to employ this type of model for initial loan decision making under a certain condition. And considering the account transaction data of obligator is accurate and easily accessible for banks, this type of model could be very beneficial for financial institutions in the country where the preparation of SMEs financial statement data is not well established. In 2017, CRD Association supported by JICA conducted preliminary data examination on Philippine SME financial statement data. The Central Bank of Philippines is working for improving SMEs access to finance as well as enhancing the quality of risk management in finance. And CRD system is a definitely useful measure for this purpose. But some people are a bit skeptical about the eligibility of SMEs financial statement data quality for the construction of CRD system. So that is why we conducted this type of data examination before starting to construct the database in Philippines. Okay, so time is not enough, so I skip a lot of parts. So based on the 3,440 data and 133 default data, we set up the number of explanatory variables, and we check the single logit regression, and we found 12 continuous variables and 35 discrete variables that marks 5% and below significant level of single logit. So they are the example of these explanatory variables. And gross margin ratio and total liability, inventory turnover day, total assets, they are very influential explanatory variables. And we found a few variables contrarily associated with the default compared to Japan data examination in Philippines, like total asset size. In Philippines, the larger total asset size is associated with the default. That indicates, we need a constructing scoring model based on the data in the home country. Based on the eligible explanatory variables, we set up the number of variable combinations for multiple logistic regression. The slide shows the combinations we finally selected. This combination marks 0.612 accuracy ratio. That is enough high, considering the number of data as very limited. As I mentioned, just 3,440 data and 133 default data. It's very small. And scoring models with more than 0.6 accuracy ratio are perceived to be eligible for practical usage. So the result of the preliminary data examination gave us the confidence to construct reliable scoring model based on Philippine data by collecting a larger number of financial assessment data. Okay, I pick up just one example. This is but okay, I just pick up one example. This is the members' employee CRD scoring for the validation of their internal rating system, rating assignment. The small-scale financial institutions and CZC employee CRD scoring model for directly credit decision makings. But in large-scale companies, many of large-scale companies established their own internal statistical scoring system based on their own database. So they use CRD scoring system for the validation of their internal rating assignment. This is sorry. This is the figure shows the matrix sheet. I will touch on the simplified concrete manner of their validation works. The vertical scale indicates the internal rating assignment, and horizontal scale indicates that of CRDs. And in green area, the result is both systems have similar assignment. But in blue and orange area, the results are conflicting. The discrepancy in the evaluation doesn't immediately mean either side inaccurate, because financial institutions' internal rating assignment usually involve qualitative factors and data outside of accounting figure that CRD system does not consider. So we need to scrutinize the factors generating difference in the evaluation, and based on this analysis, financial institutions decide to maintain kind of system, to modify it, or to reconstruct new system. Okay, time is gone now, so I finish my presentation. Thank you very much for your kind attention.